Good morning, Steve Free in Chicago with the morning grain comments. Markets are easier with beans down 7 cents, corn down 3, and wheat down 2. Soybean oil is losing ground versus soybean meal. Outside market stocks are lower, the dollar is lower, crude is lower, and the gold is higher. I think there is some concern as far as the dollar is concerned of the future of the U.S. economy and whether it's a place to continue to invest in. The weather markets mostly benign. You're seeing talk about some showers in the second week for Russia. It's raining in parts of Argentina. It's not raining on the late safrinha crop in Brazil. And temperatures are warm. They could use the rain just to finish that crop to where people think it could be. Continued to be dry in some of the wheat areas of China. And we saw wheat rally on Friday to talk that wheat might be undervalued if China needs to buy wheat. If India is not an exporter, and if we've already exported what we think we're going to see out of Canada and also out of Argentina. We'll also be watching the dryness in Western Australia. The soybean market is on the defensive simply because there's going to be too much supply. When we look at the May 12th USDA supply and demand report for the first 25-26, carryout could be as high as 600 million bushels with exports down to 1,400. You could almost say the same thing about corn. You could see a little bit lower demand and the higher crop, and carryout could be over 2 billion bushels for 25-26. So those markets, I think, are on the defensive on concern about less demand for U.S. bean exports and less demand for U.S. corn exports. The other interesting things, OPEC talk about increasing production, has crude trading down to 57, and risk on is back in the gold market on uncertainty of what happens on these trade wars. Russia and Ukraine are again attacking each other, and Israel is talking about taking over Gaza.